So either they are hedged 1-to-1 between COMEX and London, or someone has a massive short exposure as the price is rising. Now, I believe that someone would be Bank of America. And Ted Butler talked about that for a very long time, God rest his soul, that they had a 1 billion-ounce short position in silver. And to my knowledge, it's never been flushed out. But we are talking about existential threat to some of the biggest players in the world in the silver market. That so much in the way of conventional wisdom relies upon everything being okay in the monetary system, comes back to the fact that the United States has had continual prosperity and continual peace and calm. I think that's a valid point. When I think of the silver that I own, I think of almost exclusively trading it to gold at some point when the ratio snaps back. Now, that may not work either, but I agree with what he is saying. I mean, I honestly feel there's so many things pointing to a resetting of the monetary system. You can be as basic as Scott Dissent saying in an interview recently that there will be a new Bretton Woods monetary system style event within this administration. You can see the massive deliveries into COMEX and gold and silver. You can see so many things happening right now that are unusual. And then you look around in a system that is based upon trust. You see what's happening right now in Los Angeles and Atlanta and New York and Chicago and in Dallas and Austin. This is not lost on the rest of the world. It's embarrassing. We are a country that seems to, in my opinion, somewhat of lost its way, spiritually, morally, culturally. We are, I thought this stuff was behind us, but it appears it's not. And where's the trust? When you look at trust politically, economically, monetarily, and then culturally, so many of the things that as a young man or woman in this country growing up, you would aspire to be, these things are changing. Our culture is changing right in front of us. And so I think that a new monetary system is not so far-fetched anymore. We've been saying this for a while now, but what Clive says is exactly right. My guess is that we are on the cusp of a new system. What does that new system look like? Going back into dollars is the last place I think that you would want to be. So if I were drawing a playbook, I would say when the ratio gets anywhere near 45-ish to 1 silver to gold, the play is to switch to gold. Ultimately, I think that is going to be sort of the tether to a new system, will be gold, whether it be with the BRICS nations or all the countries in the global east and the global south or here in the United States. I believe that the Trump administration said to President Trump, this needs to be done right now. We need to start bringing this stuff back. We need to start reshoring. We need to do this because we are losing rapidly to the rest of the world, who is wise to the suppression of the paper markets, which have been done originally to support the illusion of the strength of the Western system, the strength of the bond market. This is a game we are being beaten at rapidly, and I would agree with him. I don't think you can look at things, if you're owning gold and silver, for the reasons that most people are these days, than to expect an orderly transition from silver or gold to another asset may not play out the same way this time. Granted, I think what it does is it gives you the ability to potentially sidestep any potential trouble in the legacy system, have dry powder, and take advantage of value and whatever that may be here in the United States. But to expect it to be linear the way that we've always expected things, I think is a stretch. So yeah, I guess we'll see. But I think people will look back at their gold and silver holdings and realize that this isn't about return on money, that this is about return of money. This is to sidestep all of the things that seem to be bearing down on this country and on this on the West all at once. I mean, even as far as the new payment system that seems to be happening with the bridge system that is connecting so much of the world, the renminbi bridge system, which is M-Bridge, they come very clear and come out and say it is not compatible with the dollar, the pound, or the euro. So they're moving in one direction. And by default, I think we will move in another direction as well. So yeah, if I had to guess, there's an equally good chance that we see a monetary system as we would seeing silver at the levels many people dream of. What does that look like? Only time will tell. It's very difficult when you're sailing in a sea of uncharted water to have an idea of where we go. But I would say it is closer to what Clive is saying than what most people would see in their mind's eye as to what the end game is. To me, there isn't a better value, period, right now, and a better way to protect yourself in an asset that is asymmetrically appealing, low downside, high upside, and we'll get into silver in a moment. But I don't know that there's an asset on the planet that, especially right now, um, has as much appeal to me as does silver. Um, Go back and look, and you'll see if you look at a chart that since 2011, which was the last all-time high for silver, where it touched 50 for for a cup of coffee. $35 has been challenged 7 times since 2011. That has been the resistance, and it has never broken through. It's failed every time since 2011. This is the third time in history we're this high. If you go back to 1980, you will see that silver was above $35 an ounce for only 40 days. That's courtesy of Vince Lancy and some of his work, and that includes the blow off top. If you look on the Shanghai Metals Exchange right now, silver closed at 38.45 an ounce in Shanghai. This is the arbitrage, and we've been talking for months now about the arbitrage price, that the higher price that silver has been listed at um, in Shanghai versus the West, and it's acted like a magnet. We continue to catch up to it. My guess is we'll see $38 and change in the very near future. Doesn't mean we're not going to see some resistance along the way, because this is the second largest short position, to my knowledge. Chris Marcus was talking about that, that it's the second largest commercial short position ever in silver. They are fighting this. But he also mentioned something, and I want to give him credit for this because I've always thought Chris was a hell of an investigative journalist. And he came up with something very interesting. And he says, um, the way that these things are supposed to work is these massive short positions that they now have in the commercial banks on COMEX are supposed to be hedged, right? They're supposed to be hedged in London. And if that's the case, if that is the case, that would mean that the free float in London is only 7.5 million ounces, not the 275 million ounces that we have been led to believe. So either they are hedged 1-to-1 between COMEX and London, or someone has a massive short exposure as the price is rising. Now, I believe that someone would be Bank of America. And Ted Butler talked about that for a very long time, God rest his soul, that they had a 1 billion ounce short position in silver. And to my knowledge, it's never been flushed out. But we are talking about existential threat to some of the biggest players in the world in the silver market. The May contract, as we mentioned before, had the largest delivery in the history of the COMEX, somewhere in the neighborhood of 15,000 contracts at 5,000 ounces apiece stood for delivery on the May contract. But this is a pattern that we've seen continually over and over and over again. And so I would say to you that there's a big group of very sophisticated traders that are trying to hold this down. But it appears as though maybe they are losing control. I would argue they've lost control in gold. And gold has broken through. They both have that same cup and handle formation. Silver's is 45 years long. I mean, they don't get any more bullish than that. A cup and handle formation in technical analysis is supremely bullish, especially one that is drawn out as long as silver has. Gold has busted through the resistance. Silver, on the other hand, is right at the resistance. And closing above 35 on a weekly, which is amazing, is huge. Keep in mind, it only stayed above 35 for 40 days in 1980. The longer we stay above 35 is very, very big, and especially 36. We need to close the month above that. Once we do, I think you'll see a whole bunch of the institutional money, who is all technical analysis, jump on board. And this is one of these deals where one of these days remember what happened to Bear Stearns, and remember the interview that we've talked about again, Chris Marcus, his interview with Bart Chilton, the former head of the CFTC, who talked about what happened with Bear Stearns short position when silver went to from $9 to 21, and in essence